This is the Stock Market Daily News Podcast for Tuesday, November 18th, 2025. Yesterday, U.S. stocks ended on a mixed note after a choppy session. The Dow Jones closed down about 0.6% to 47,147. The S&P 500 finished flat near 6,734. And the Nasdaq inched up just above break-even to close at 22,900. Weakness in global tech stocks and skittish sentiment weighed on indices, but there was still a spark from the day's top headlines. Today, we'll break down Michael Burry's dire new warning on the AI boom, Japan's tourism stocks in freefall after a diplomatic clash with China, the latest cash transfer debate shaking up Indian markets, and whether crypto bulls are really down for the count after last week's brutal sell-off. Let's dive in. First up, legendary investor Michael Burry, famous for The Big Short, issued a striking warning about the artificial intelligence boom, using a Lord of the Rings meme. He posted a chart suggesting a pattern. When stock indices hit new highs amid heavy capital spending, a crash often follows. Burry argued that the AI spending frenzy, think OpenAI and Meta pouring trillions into chips and data centers, could end in a correction, just like past tech and energy booms. His recent bets against Nvidia and Palantir underline his bearish stance. For investors, Burry's point is clear. Beware when optimism blinds markets to risks, especially if capex keeps soaring while stocks stagnate. Turning to Asia, Japan's tourism stocks plunged yesterday after China warned its citizens against traveling to Japan, escalating diplomatic friction over Taiwan. Major department store Isetan Mitsukoshi dropped more than 11%, Shiseido fell 9.5%, and Japan Airlines lost 4%. The slump hit the Nikkei 225, which closed just barely negative. With Chinese tourists making up a quarter of Japan's visitors, even a 30% drop would shave 0.2% off GDP. For investors in Japanese travel and retail, geopolitical tensions are a fresh and real shock risk. Back in India, markets cheered the National Democratic Alliance's victory in Bihar, buoyed by generous pre-election cash transfers. While stocks rallied, strategists warned that such stimulus could push state fiscal deficits well above the 3% threshold. Brokerage picks included consumer-focused stocks like Godrej, Marico, and TVS, expected to benefit most from robust spending. But the longer-term takeaway? Investors should watch for rising government debt and potential inflation pressures as subsidies mount. Shifting to crypto, Bitcoin and major tokens tumbled last week. Bitcoin slid below the $100,000 mark and found temporary support near 95,000. Ether, XRP, and Solana all dropped between 8 and 16%. What's driving the pain? Weakness in U.S. tech stocks, waning ETF inflows, and key institutional investors cashing out. Still, daybook analysis suggests hope remains for bulls, as technical support may spark a bounce if macro conditions ease. Crypto watchers should monitor Fed signals and ETF flows closely before declaring a true bear market. Finally, Bitmine Immersion Technologies piled into Ethereum, buying over $170 million worth of Ether last week, even as crypto stocks like Coinbase and Riot Platforms dropped between 1 and 6%. Chairman Tom Lee explained that liquidity is tight after October's crash, but argued the top for crypto is still to come, pointing to longer-term catalysts like real-world asset tokenization. To recap, the Dow dropped, the S&P was flat, and the Nasdaq managed a small gain. Investors are juggling caution in tech, new risks in Asia, and fiscal fireworks in India, while crypto markets are searching for their next spark. Looking ahead, keep your eyes on Fed speeches and inflation data this week. The next moves could set the tone into Thanksgiving. Thanks for tuning in to Stock Market Daily News Podcast. Don't forget to subscribe or follow for your daily market roundup. See you tomorrow.